Probably the number one question that I get asked on a regular basis is, how much should I be paying myself? Hey, badass business owners, my name is Tammy and I'm here to help you grow your business, but more importantly, grow those profits. And yes, a question I get all of the time, especially when I'm talking to somebody who's finally starting to look at their business numbers, is how much should I be paying myself? Well, that's a dangerous question because the answer really is, it depends. Because ultimately, it's going to depend upon how well you're currently running your business. Because if you're running a poor business, you have no idea what your profits are, you're not growing, you're wasting money, the odds are you might not be getting paid anything, which is some of you out there listening, or you might not be able to maximize what it is that you want to make. But here's the good thing. Once you start paying attention and you start looking at the numbers, it's way easier to determine how much you should be paying yourself. And I thought what we would do is we would talk a little bit about this topic here, because first I want to talk a little bit about some of the bad things that I see out there going on that really impedes you from being able to pay yourself. And then we'll kind of talk and veer into, the good stuff. How much can I be paying myself? Because ultimately, you kind of have to know what it is you're trying to make. I've had conversations, so let me start with this. I've had conversations with people and I'm like, well, what do you need to make? Well, I don't know. Well, there's no real concrete answer in how much they even want to try to make. If I ask them what it is that they are taking now, I get the same kind of response. Well, I take some money here and there and I don't take that much, or I don't pay myself. And then when I'm looking at their numbers, believe it or not, they're taking a lot more money than they think they are. So here's the problem. People want to know that I can take $1,000 a week out of my business. But what they don't realize is, in some cases, they're already taking $1,000 out. It's just death by 1,000 cuts. Because what they're doing is, and you hear me talk about this, and I'm going to keep talking about it because you really need to understand how you're hurting yourself on this. They're taking $25 out every single day to go eat. They're taking money out because they're spending, they go to some place for personal reasons and they use the business credit card, or they go buy something from online and they use the business credit card. And when you add up all of the money that they're spending every single week, they're probably wasting anywhere from $250 to $500 a week just in personal expenses, which, by the way, is you paying yourself, right? Because they're not business expenses. So if the business is paying for it, that is money you're withdrawing from the business for your own personal needs. So a lot of times people are going, well, I want to make that 1,000. Great. First thing, I can get you an instant raise. Stop spending money that has nothing to do with the business. And if you want to spend that money, great. Pull it out of the business as if you're paying yourself, put it in your personal account, and then you can say, wow, I just paid myself $500. It's going to feel good. But then you realize you've been wasting it on other stuff. And I guarantee you, if you put that in your personal account, you're not going to buy half that stuff that you go spend money on. But you just think, I got money in my business account, I'll go spend it. So when people ask, how much can I pay myself? That is one of the very first areas that I look, because a lot of times they're already paying themselves more than they realize they are, but they're just not paying attention to it. They're just not looking at their books. They're not doing books. They're not paying attention. They're not looking at their bank statements. They're not doing anything. Because even if you don't have QuickBooks or you don't have any way of doing your numbers, just look at your bank statement. Your bank statement will tell you. I mean, it'll say Panera Bread, whatever, over and over if that's what you've got a fetish for. Or if you're going getting a smoothie every single day, or a coffee at Starbucks, or you found your favorite taco place. Your bank statement is a good place to start. So I don't want to hear any excuses that I just don't do my book, so I don't know what that number is. Pull up your bank statement, look at it, and I promise you, it's already giving you big clues as to where you're spending your money. So let's keep going here, right? So when you're saying, hey, how much money can I take? Well, don't we also have to ask, how much profit are you making off of the money that you're selling already? Because if your sales are a certain amount, right? Let's just say they're $2,000 for the week. The first question we want to ask is, how much money is going out on those sales? Well, your cost of goods is an easy one for most people. Most people are doubling up their costs. So their costs are anywhere between 40 and 60% of what their sale is. So we're going to land in the middle. So if they sold $2,000 in sales, more than likely their costs were $1,000. Now, when I think of costs, I think of two things: the materials and products that they're using, and the labor hours that they're part of that, especially if they have to hire subcontractors to help them out, or someone else. Really, it should be yourself, because one of the things I talk about all the time is you are labor, and you need to make sure you are paying yourself first and foremost for the employee time. So that's how you're going to get a regular paycheck is, I think of it this way. Hang on, I'm bouncing around on you and I don't want to do that. So just remember your costs include the labor. Now let me take a pause here for a minute because I want to explain this concept. You get paid two ways in your business. The first way is as the employee in the business, and the second one is as the business owner. At the end of the day, it's all out of the same pot of money. Okay? Unless you are an S Corp or a C Corp where you're getting actual paychecks for your employee time, for the majority of you that are solopreneurs that are just taking owner's draws, your first owner's draw, what you pay yourself every week, should be the employee time for the labor that you have been charging as part of your pricing. So if you worked 30 hours and you billed 30 hours worth of work, you should be able to pull out some of that money as an employee in the business. The second way you get paid is if your business is profitable in the first place. Because if your business is profitable, and let's just say you have $500 left over at the end of the month, you should be able to say, okay, with this $500, I have my three things. Because remember, we talk about this. Your profit has three jobs. One is to pay taxes. One is retained earnings and pay debt. And then also finally is what you get to take. So if you set some of that aside for your taxes. You put $200 aside for that. You've got a $200 loan payment that you've got to make or reinvest back in the business. That leaves you $100 for you to be able to draw as the owner. That's kind of the way it works, just basic principle of it. We'll talk about this more. The employee you should be getting these checks. So you might say that I pay me, the employee, $500 a week just for my employee time because that's what I'm collecting money for. So that goes back to that cost of goods. And I know this can get really confusing at times because people, at the end of the day, you're getting taxed on any money you take out of the business. Like I said, unless you're an S Corp or a C Corp, the rest of you, regular solopreneurs, even if you have subs or you have a payroll that you pay somebody, in most cases, if you're not one of those other two, all the money that you pull out, you have to pay taxes on. So you have to keep that in mind that $500 profit at the end also has to pay the taxes on any other money that you've taken out of the business because your actual profit is including money you've probably already taken out of the business. So you got to kind of keep that in mind. So your profit might read $2,500, but you've already pulled out $2,000 and what's left is the $500. But the actual profit line reads $2,500. But you've got to keep in mind, I pulled out $500 every single week, so I've already pulled out $200 of it. Like I said, I know this is confusing, and I need to do more teaching videos so that you can see this with actual examples versus just the audio component of all of this. So just keep that in mind. To go back to how much can I pay myself? Remember, we just said your sales, you got to figure out what your cost of goods are. So let's bring that back. So let's just say you had that $2,000 in sales, your cost of goods was $1,000, that left you $1,000. A mistake that a lot of people make is they start putting that money in their pocket, and you can't do that. You need to leave it in the business, right? You should have paid yourself out of those cost of goods, but the rest of that $1,000 has to stay in the business because you have to pay your expenses. And depending upon how much your expenses run for your business, that'll let you know how much is probably left over down the road for you as the business owner and the profits of the business. Because some people run 25% of their sales is for expenses. Some people are as high as 50%. Some people are as low as 15%. It just depends upon your business. And that's off of the sales, by the way. So it's not off of that remaining $1,000. If your cost of goods runs 25%, it's off of the initial $2,000, which means $500 is going to be spent out of that remaining $1,000 just to pay your expenses. And by the way, we do have some videos over on YouTube that actually kind of show you a little bit more how this works because it ties into your P&L. And this is why I'm such a big proponent of you've got to know your numbers. You've got to use QuickBooks. You've got to where you can pull up a P&L, you need to categorize those transactions. You need to put them in the right spots. Because if you do that, it's going to help you understand how much money you're spending personally, quote unquote, out of the account that has nothing to do with the business. Those owner draws you're already taking, but it's also going to give you an idea and a percentage of how much of your costs going out are true expenses of the business. Because I think sometimes people think they're spending way more on expenses than they are. And actually less at the same time, if this makes any sense, because we're seeing all this money come out and we just assume we're spending all this money on expenses, but we already identified that some of that money you're spending is actually owner's draws. But then when you sit there and you add it up in your head and you're like, well, this costs this and this costs this, we leave off things. So our expenses actually are higher on the legit things that are part of our business and our expenses. So we're kind of adding in the stuff that isn't, but we're not counting the things that are. So it gets really confusing, which is why you need to look at that. You need to pick Financial Fridays, or like one of my clients do, but you need to pick a day that you're looking at your numbers and you're paying attention to where the money's going as it flows in and it flows out. What's going on with that money and what's happening with it? So when people start asking me, how much can I pay myself? I would love to tell you how much you can make and how much you should be able to pull out. But honestly, I don't even know, because until I get into your numbers and we see what's going on, we can't have that dialogue. So a lot of people, for example, when they call me up and we get on bookkeeping services, one of the first questions, once again, how much can I pay myself? And I said, great. As soon as we catch you up and we can see what you got going on, we can have that conversation. And sometimes that's quick. Sometimes it takes a month or two to get the mess cleaned up. Depends upon what the mess looks like. But the cool thing is, once you see the numbers, you can really see the detail of how well somebody's pricing, how they're spending their money, how much money they're wasting, how much money they're pulling out for personal reasons, how much money they're spending on this food, or how much time they're spending going off golfing or bowling, or buying things at certain stores. Some people gambling. I mean, you name it. I've seen everything through what people are doing with that account. And, it's all good. It's all cool. But just know those are owner's draw. That is money you're taking out of the business. So when you say, I just want to be able to pull out $1,000. Okay, well, you're already pulling out half for all this other junk you're doing. So really what you're looking for is 500. And when I say that, they're like, well, no, I want 1,000. Great. Then stop doing these other things. Okay. So yes, it all runs full circle, but honestly, you don't know unless you start looking. So if you don't use bookkeeping and you don't plan to use bookkeeping, to me, it's the wrong move, but I understand, especially depending upon where you're at. Open up those bank statements, see where your money's going, see what you're spending it on. Okay. But I'm highly going to recommend that you start bookkeeping services. Whether you do it yourself, you find a family member to do it, you hire a bookkeeper, you hire me, whatever. You start doing that so you can start looking at the numbers and seeing how you're doing, not just at the end of the year. For example, when I'm talking to clients, I'm like, let's look at the last 12 months. Let's look at your history. What's going on? Because if you're up and down all over the place with the profits, it's going to be hard to dictate what number you take every single month. Because in your good months, you might be taking more than in your bad months, right? You might, if you're a seasonal business, you might pull out more money during the 9 months you're doing really well, and you're not taking out as much money, if any, during those slower months. It just depends. Everybody's situation is different, because until you get your business throwing off enough money to be able to pay you, you're going to have a hard time. But just keep in mind, like we said, you should be getting paid 2 different ways in your business. The employee, who you are making sure you're accounting for your labor in your pricing, and that should guarantee you some kind of money. Okay? Because the mistake I see is people aren't putting themselves in that labor, and what's happening is they're not making enough money to be able to pull out any money. And for some of you, you think you're like going, oh, well, there's going to be 2 labor hours in there, but you're not accounting for the other part of the component, which is the expenses. So if you're putting in the labor hours thinking, oh, I can pay myself, but you're not making sure there's enough of a gross margin, enough money after your costs to pay your bills, then what's happening is you, the business owner, are having to rob yourself to pay your bills. And sometimes you'll see that where people will pull out, $1,000 every single week, get to the end of the month, they have bills, and then they have to put money back in to the business. And this happens all the time, because there's times when I'm doing people's stuff, I see them put money in, take money out, put money in, the contributions to the business and taking out of the business, a lot of times it is so self-inflicted. How do people do that? They go shopping. They go eat, they go spend money. And another big one that I haven't hit on yet is they run that account to zero most of the time. And what happens is bills hit and now they're paying like ridiculous $34, $35. I mean, these overdraft fees are ridiculous that these banks are doing right now. Every once in a while I'll see a 15, but most of them are 30 plus with what I'm getting. And what they're getting hit with is insufficient fund fees of $30 to $35 over and over and over. And it's like, well, there's some of your profit because there goes another $200 to $500 a month just out in fees because we run those accounts too low. And that's a whole video for a different day, but I really want to make sure we get to the point where you always have money in your account. You should never be running them to zero. I don't care if you keep them at $1,000, but I think you need to pick a number. A lot of people it's 5,000, some people it's 10. It just depends upon your business. Matter of fact, I'm going to write that down because I think that's a good video for us to do. So give me 1 second. Okay, I'm back. Thank you. I just had to go write that down. Otherwise I would forget later going, what was that idea I had for a video? But anyways, let's go back to this. How much money can you be taking out every single week? It depends. I would love to be able to give you a number, but I think you need to start thinking about what it is that you need to have every single week. What is your goal that you want to have every single week? Then I think you need to go see where you're spending your money currently today and how much money is coming out that you're not even thinking about or counting towards that goal. Then you need to figure out, is your pricing correct? Are you pricing in a way that's going to create the profit that you need? Maybe you need to drive more sales. Maybe you're running lean and mean. You're not pulling out money from the business. You're not taking any of that. Your pricing is pretty good. You have a sales problem. Then we go attack the sales problem to be able to create the money that you need to be able to take out. Everybody's in a different situation, but it all comes down to one thing. You cannot get the answer unless you're looking at those business numbers and you're looking at the fact that, hey, how much money am I taking in? What's going on? You need to be looking at those bank statements. You need to be looking at QuickBooks. You need to be looking at your profit and loss statement. There's so many different ways that you can get the information that you need to figure out. So just ask yourself first and foremost, how much are you taking today? A lot of people don't even know that. So start there. How much am I taking out right now? What is it that I need to get to? Where's my money going currently? And then what do I need to do to increase that number? That's really as simple as it is. But there is no easy answer when you first ask the question. You got to look at the numbers and you got to dive in and you got to figure out what's going on with the money now. Then you can start figuring out what to do with it. So hopefully today we've covered a wide range of things, and hopefully you've got a couple of ideas of where you can start. Just remember, you get paid two ways as a business owner. One is the employee in the business doing the work. Second is the business owner. The employee should be getting paid based off of the labor hours that you're putting into your pricing as part of the entire thing. Those are still draws. They're still coming off of your profits, but at least you know you've built enough margin in there for you to be able to take money out of your business. And then the business owner is going to get anything above and beyond that after you've taken care of your taxes and you've taken care of any debt that you have. Hopefully you're going to be debt free, and that's the goal, right? Any debt or money you need to leave in the business to be able to grow the business. Then after you take away what you've already paid yourself, hopefully there's some extra money for you to be able to pay. That's basically what it comes down to. So I want you to be able to make as much money as you need to make. I want you to be able to make money, period. Because there are some of you out there that aren't really making any money, and you know who you are, and it just starts. You got to start somewhere. So start with the business numbers, see what's going on, and then you can put a plan together. That's how I work it when I work with my people. Okay, let's see where you are today. And, I don't care if we're coaching or if I'm doing your books, that's where we start. Where are we today? What's going on? What's the situation? Then we can try to figure out what's the plan. So I want you to do the same thing for yourself. I want you to go look at your numbers. I want you to dive into everything that you have, any information that you have, bank statements, QuickBooks, whatever you've got going on, and figure out where you're at. And then what's the goal? And then how you're going to get there. Okay? Go see how much money you're already pulling out of the business that you're not even thinking about. All right, with that, I'm just rattling. I'm just going to keep repeating myself because repetition is how we learn, right? That's how we get better and better, because we've got to think about it, then we got to take action. Some of you are working, some of you are listening as you drive. Just remember, you got to take action. So when you're not doing those things, you got to go dive in. Pick a day every single day that you're looking at your business numbers. Whether it's the first 15 minutes of every morning, it's a set day that you look at your numbers. I don't care. But your business numbers are the key to unlocking you paying yourself and paying yourself very well. All right. With that, I'm out of here and I will talk to you next time. Bye for now.